Welcome to Second Take, the show that focuses on the issues behind the news. Mining Weekly editor Martin Creamer joins me today to unpack the latest in the mining industry. Welcome, Martin.
Thanks, Ashley.
Now, Glencore will study the feasibility of the creation of a hydrometallurgical facility in Italy.
You know, circularity is becoming huge. The circular economy, where you take things from the cradle to the grave and then you resurrect them again, especially in the critical metals arena, is something that Glencore is pursuing regularly now. You see announcements. You know, last month it was an announcement of a critical metals-based deal with Spain and Portugal. This month it's with Italy. And always there we're noticing that hydrometallurgical processing is big. And I think the days of pyrometallurgical processing are being questioned, and will it go forward? Because you need to look at what the whole climate change situation points to. And we see that they are looking into the feasibility of a hydrometallurgical plant. And again, they've partnered. You know, they've partnered with every circular economy deal they've done. And it will mean that, you know, they will then be able to trade those metals as they come through, and others will be able to do the processing who really are skilled in that. And in every effort, you know, these are big projects they're looking at. So it's going to be very interesting to see how, you know, we produce the metals, they go into the market, but then under Scope 3, you recover those and try and put them back into the market. Sometimes there's an intermediary spot where they can go in before they're actually totally useless. And so it's something that I think the whole world should be looking at. We should be looking at here, because there's a lot of potential business in it.
Now, as South Africans deal with load shedding, Sibanye-Stillwater is pushing with its own generation of energy.
Yes, they want rapid self-generation. You know, it's necessary at this time. We can see the load shedding impact, very disruptive, but at the same time, you know, a lot of the red tape has been removed to get these people going. And this week, Sibanye-Stillwater spoke of, in South Africa, concentrated on rapid embedded renewable generation. And you can see that they're talking above the 500 megawatts if you look at all of it. And importantly, I think the government should declare more of these projects, what they call SIP projects. You know, it's a special infrastructural project that if you have that declaration and status, you can speed things up. A lot of the platinum mining companies, like Sibanye, which is also gold, of course, is there's a focus on this. And it's hard to keep up with the news because it seems to be moving so fast. And you think, well, that's the number of megawattage that's coming through, but all of a sudden it's bigger. Like yesterday we were told that, you know, the private sector was actually coming through with 13,000 megawatts. Before that we had told it was 9,000, and then looking at 10,000, all of a sudden it's 13,000. So behind the scenes, you know, NERSA is approving these fast, not really publicizing it. And one can see that there's a little bit of light at the end of the tunnel, that the private sector again is coming in fast, you know, to produce that renewable energy. I mean, next month there'll be 30 megawatts, for instance, coming from Harmony Gold, you know, in Welkom. That's next month. So already the gold is ahead. You know, we saw Pan African with their 10 megawatts out on the far East Rand. I mean, they would have done that quicker if they could, and they're going into new things now. Then on the far West Rand, we saw Goldfields come through with 50 megawatts. They would have done that quicker if they could as well. And now they're looking at wind and much more. Just about every big private sector company is looking to embedded self-generation because the cap has been removed. So hopefully, you know, we'll see more and more light at the end of the tunnel. At the same time, you know, get the Eskom going well again. And hopefully we can just beat this load shedding curse.
Lastly, Martin, exploration and investment needs to be made more attractive in South Africa.
Definitely. You know, when you look at this, is a mining jurisdiction. You know, we've got the metals in the ground. That's 9/10 of the battle, you know. You should be actually facilitating activities to remove particularly critical metals at this stage. We've had a different behavior pattern in South Africa. You know, in Canada in the 70s, people got around and said, gee, we can't get any investment. What are we going to do? They created the flow-through share scheme, and brother, I mean, they've got more mining companies on their stock exchange than anyone else. Australia have got similar things. You know, even London AIM has got something. We had this behavior pattern in the past where the state wasn't involved in actual custodianship of the metals in the ground. It was the private sector that controlled that. So when we moved out of that regime in 1994, we didn't have a track record to follow. It was all different. You know, the private sector was no longer doing it. You had to apply for licensing. We weren't used to that. So we've fallen back so badly. We've got to catch up. You know, without catching up, our economy is going to be badly hit. And we can see what happens in Canada particularly. I mean, that not only creates a lot of jobs, but it brings in money into the fiscus. So here you get the slight tax credit that you could get from our national treasury, which is very rigid on this. But it just is amazing how much that generates back into the coffers, not only by individuals who are getting that tax credit, but the actual corporate tax comes flying through, and your country is also seen as a place to invest. You know, in a distance, people look at Canada and say, "Oh, that's got a flow through. Oh, we'll go to that." Now, we need that incentive here, and it's urgent. And I think that South African corporation just needs to knock on that door, because Treasury has acknowledged that they've concurred that we need something. So they put in one thing, it was an absolute disaster. They put in a second thing, you know, worse of a disaster. But that's not bad, because in that they've acknowledged that something has to be done. So they try to reinvent the wheel. They couldn't. Now, don't reinvent the wheel. Grab what other countries have got. Get going on that. If you want to modify it slightly later, okay. But why not just let it go? It's so beneficial. It's worked. It's worked very well in Canada. So we're saying to your National Treasury, allow the flow-through scheme to come through as you wanted to do. You know, in the 2000s, the early 2000s.
Thanks for speaking with us, Martin.
It's a great pleasure, Sashni.
That's it for today. Join us again next week for more news analysis on the local and global mining industries. To subscribe to Creamer Media's Engineering News and Mining Weekly, please email subscriptions at creamermedia.co.za.